Hi, my name's Edward Finch and I'm the Managing Director of MRIB. Today we're going to go through business interruption insurance and the importance of making sure that you've got the right calculation. But what is business interruption? Following a claim from fire or flood, often companies will see their turnover reduce and their operating expenses go up. We and your insurers will look to compensate you so you're put back in the same position as if the event hadn't occurred. Business interruption, or BI, is one of the most important insurances to purchase for a company, but over 70% of the UK companies purchase this incorrectly. Because of this common error, a huge number of companies, up to 70%, are significantly underinsured. The simple reason for this is that insurance BI is not the same as accountancy gross profit. But what does underinsurance mean? When you're underinsured, following a claim, insurers will apply average. So, if average applies to your claim, insurers will penalise you and you will be responsible for a significant percentage of the claim. So, in summary, if you have the wrong business interruption formula or calculation, you will have to fund from your own resources the claim that the insurers will not contribute to. Let's look at the impact of underinsurance. The formula used to calculate this is the declared value divided by the correct value times the loss. So if we look at a real example, a company insured its business interruption for 1.5 million. The actual correct value was 3.25 million. They only sustained a loss of £275,000, but the insurers applied average, so the total payout was only £126,000, giving them a shortfall of £149,000. So how can we stop this happening to you? Let's look at the two different formulas in gross profit. First of all, the accountancy. This is quite simple. It's turnover less cost of sales. The insurance formula is turnover plus closing stock minus cost of purchases, opening stock, cost of packaging and freight, and bad debts. What's really important to remember in the insurance gross profit calculator, in respect to purchases, this should not include your direct wages as you want that cost included in any settlement. So let's look at a real life example of a company and how they insured their gross profit before they came to MRIB. They specialised in blending of foods, and using the accountancy gross profit, which is what they were using, they had a gross profit or business interruption sum insured of 3.59 million. The actual correct insurance gross profit was just over 7 million. Following this through, if they'd maintained the incorrect calculation and then had a claim of £486,000, they would have only received £246,000, leaving them underinsured or out of pocket by £240,000 when turnover is going down and costs are going up. To increase the gross profit on this company from 3.59 million to just over 7 million cost literally a few £1,000s. The consequences of getting it wrong could cost you hundreds of thousands, if not millions. And worst case, but a very realistic worst case, is you see your company fold because it is unable to sustain the losses on its own. At MRIB, we're experts in insurance and really understand business interruption for your business. If you'd like to talk to us further on business interruption or any other insurance related matters, please do get in contact with us either by email, which is now on the screen, or by phone number. Thanks very much for listening, and I do hope you've enjoyed this.